You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program where we break down what's going on in the world of crypto trading. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And we got another great guest lined up for you on the show. So without further ado, let's get right to it and dive right on into the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of derivatives, or crypto derivatives, I should say, and proceed to pick their brains for the benefit of you out there, the listener. And our next guest he's a newcomer to this show. He's not quite a newcomer to the network, even though it has been a while since he's joined us. In fact, his last appearance was on our interview show way back in September of 2016. So it's been a bit, and a lot has changed in his neck of the woods. So let me welcome on Brian Liston, the COO of Seed CX. Brian, welcome back to the Options Insider Radio Network.
Thank you. Yeah, no, very much appreciate it. It's kind of, it's crazy to think back that the last time we spoke on the show was 2016, 2.5 years. A lot has happened, but it's a pleasure to be here. Appreciate you hosting me.
A lot has happened in the interim. Let's start catching our listeners up. Obviously, a lot has happened, as you mentioned, in those last 2.5 years. And we also, this is a new program with a very much a new audience coming into the network for the first time and kind of dipping their toes into the world of crypto and indeed derivatives. So why don't you go ahead and give our audience a bit of an overview of your background in the financial space and then what it is you guys do actually at Seed CX.
Sure. So my background is in commodity research. I spent a lot of time researching the development of new assets, new products, and how an asset kind of grows from something that's very nascent, commercially traded, to a very structured product. And I did this throughout kind of academic degrees and graduate programs. I did my Master of Finance at MIT, where I did a focused degree on this topic. Prior to that, I worked in kind of a couple of different areas of finance. I worked in venture capital. I worked at Skype in kind of the finance department, trying to generate some revenue for a free product, which was always an interesting problem to try and solve.
So you tell me when our Skype crashes here in the studio all the time, you're the guy I could call? I didn't know that.
Yeah, just call me up. I'll sort you out.
I would have been on the horn with you a lot more frequently in the last 2.5 years.
Yeah, so I'm probably not the guy for that, but I definitely interacted with a lot of those. And it was a really, really good learning opportunity. And then after that, I actually started another company in Ireland, which was a kind of a small market-based student job board. And then I left that to kind of do my graduate program, Master of Finance, as I described. So since I left that and graduated that program, been focusing full on seed. And so as you described, I'm the COO, one of the co-founders, and we've been focused on building out a kind of a market structure for emerging assets, and happy to kind of dive into what seed is as well. But I think just summing up, my background has always been kind of at the emerging side of finance, either in venture, in startups, or in kind of trading. And that's kind of the area where I think there's a lot of opportunity. Things move very quickly, and I very much enjoy that kind of industry. So that's what's attracted me ultimately to crypto.
Well, Brian, the last time you were on, you were very much excited to talk about a new startup exchange in a new area of the space, a hot new, somewhat controversial area of the space that also started with C, but it wasn't crypto, it was cannabis. Seed, as the name maybe implies, listeners, launched as an original kind of cannabis derivatives exchange. You've obviously pivoted since then into another highly volatile, highly interesting, highly controversial C, which is crypto. So walk us through that. What prompted you to move from one C to another?
Yeah, it's funny how the CX kind of nicely coincidentally.
Yeah, it all pretty much still works.
It works perfectly. Yeah, we originally started Seed with an interest in the cannabis space, and when my co-founder Edward and I met, we were very much thinking, how does the cannabis industry grow from an academic perspective? And he had done some other interesting research around trading niche products in the Middle East and using that information to predict terrorism. And it was very academic, but very interesting kind of thought process. And so we decided to look, what value could we derive looking within the US, and what products kind of need that price transparency and kind of the value you can get out of that. And we identified cannabis as this huge, very rapidly growing, interesting market. And so we did some research into the development of cannabis derivatives. And what we realized was the hemp industry, which is kind of growing quite well now, had just been legalized in 2014. So CBD and these other products were being grown and then shipped across state lines. And so the market was missing infrastructure to trade it, to deliver it, and to ultimately offer some sort of risk mitigation through derivatives. And we built Seed to cater to that market. And so Seed, kind of cannabis exchange, Seed CX, was kind of built upon the basis of serving this niche, stigmatized industry. And we spent a lot of time looking at that. We worked with the CFTC. We got regulated as a SEF, as a derivatives exchange. We built up kind of spot market infrastructure. We had delivery mechanics. All CBD would have gone to a warehouse in Colorado, been tested. It was actually pretty interesting infrastructure, and we were excited about it. Ultimately, and we even got a product kind of ready to be traded. And so we were very excited to kind of launch the first physically settled hemp cannabis contract in the United States. Although that was sort of on the presumption or the assumption of certain growth that was going to occur. In early 2017, we saw a lot of the kind of capital and investment and interest in the industry shift up to Canada. And while we had expanded outside of the cannabis product line, we had also got an avocado contract approved, an organic corn product approved, a lime contract. So the C sort of evolved to just general commodities. Once the hemp and cannabis industry seemed to leave the United States, we kind of had to ask ourselves, is our focus the cannabis industry, or is it alternative products? And I think that was when we decided it was the latter. And so we looked around at different industries at the time, sort of early 2017, mid 2017. One really stood out, which is the crypto industry, another C. And we realized it was missing the same types of infrastructures that the cannabis industry was. Banking was difficult. Regulation was complicated. It's not well understood. There's stigma associated with the industry. It's relatively niche but volatile. growing quickly. And so really the kind of the philosophy was very similar. It aligned very well with the vision of seed originally. It's just you start to solve different problems. Instead of solving how to deliver hemp across state lines, which is logistics around barns, grains, trucks, freights, you are solving custody of private keys. And how do you do that in a secure way? How do you deliver onto the blockchain? But ultimately, from the exchange perspective, it's almost the exact same. You trade it the same way. An instrument looks the same to a matching engine, no matter what it is. It's all about delivery. And so that's where we spent a lot of kind of at the end of 2017 and all of 2018 was building up our delivery infrastructure. And so it was sort of a long path, but I think ultimately the hemp and the cannabis beginnings of seed helped kind of bring us to the crypto industry in a really fully formed way and made us ready to kind of serve it in a unique way. So we're fully institutionally focused, and we provide both an exchange and a settlement platform for digital assets. And it's been quite the pivot, but I think it ultimately doesn't seem like that much of a pivot when you align the two products side by side. And they're very similar in a lot of ways, ultimately.
Yeah, and the name, right? The name still works, so it all still works. I think it sounds like cannabis had just grown up too much. It was too regulated. It was too approved for your taste. You needed to get further afield. I think cryptozoology might be the next crazy C product that you guys pivot into. Cryptozoology future. I think there's a hot area of interest there. So just maybe put that on the back of your mind here while you're talking for the next pivot, the next iteration of seed coming down the pike. But you mentioned, jokes aside, maybe jokes not landing 100%, but we try here. Either way, jokes aside though, looking at what's going on here in the crypto space, you guys launched your spot trading back on the 23rd of January. So obviously these are interesting times, interesting waters to kind of be launching a new crypto venture in. Obviously, when you mentioned kind of starting to look at this in 2017, in that time frame, obviously it was kind of all puppy dogs and rainbows in the crypto space. Everything was shooting upwards. Every quarter, things were growing orders of magnitude. Exchanges were racing each other to leap into the space. We saw CME and SIBO having a dogfight effectively to who can launch futures first. It seemed like a foregone conclusion. Options were the next thing coming down the pike. It was all puppy dogs and rainbows. Then 2018 hit, and we kind of saw the beginning of this protracted bear market out there in most of the major crypto products. So I'm curious for you guys, what was it like in maybe those early days after the pivot and building out this platform and getting the products listed while you're seeing the main, essentially, product category that you pivoted into hitting some headwinds? Was that a challenge for you guys? Did you ever say, hey, maybe we should leap back? What was that process like?
Yeah, no, I think it's sort of an interesting one where the history of the crypto space kind of needs to be replayed very, very quickly. When 2017 was ongoing, yeah, absolutely. Everything was up and everything was to the right. And so you kind of nobody could make a bad decision. Every investor was a genius to their friends. Every fund was making outlandish returns, and every exchange was kind of capturing huge value. And I think that started to bring a lot of people into the space. A lot of retail hype, a lot of hype in general. So that was one kind of factor. Then you had this kind of this new product type or this new mechanism to raise capital under an ICO. And so that's another factor. And so people who are looking for a way to just get rich quickly were just pumping and pumping and pumping. And 2017 was kind of the year of the pump, the year of the ICO. It was a very exciting year. I was like trading it personally was a lot of fun. And you learned a lot, kind of the good and the bad of the space. But I think that is not sustainable. And it was not sustainable at the time. And I think anybody who'd been around trading long enough could see it. I remember speaking to kind of investors and fund managers who were raising capital. They'd never traded before, but they were raising tens of millions of dollars to start trading digital assets. And kind of I'm asking questions about kind of risk management or anything about portfolio management. And these kind of were new concepts to them. And it was very indicative of the time. And so I think 2018 was the manifestation of what that brings to you. It's kind of correction. It's the very rapid realization that risk is a real thing. And so people who are not as familiar with trading or not as familiar that what goes up can also go down and can go down quickly, were taught. And I think that's good. And so when we were raising capital first pivoting or entering the crypto space in late 2017, these were things that we spoke about. We spoke about there was the future need for more risk management, the need for more institutional infrastructure, that there's a lot of retail exchanges, but as the returns come down, your risk-weighted kind of decision-making starts to think of a certain exchange over another as being too risky, and the returns are not worth it. And so you start to look at, okay, how do I reduce operational risk to keep the returns looking attractive? And so that was our pitch, and that was kind of our thesis. And so 2018, when prices started to compress, people were looking for an exchange that kind of either had some experience or had some basis for how the future needed to fold out. And so we were actually pretty lucky in 2018, and kind of the worst kind of part of the bear market. We raised our Series B, which was a $15.5 million round, kind of led by Bain Capital and ALTCOIN. And so we had some really strong investors, kind of people believing in us. And they believed in us because when you have a correction like 2018, people start to look for the secure exchange, the institutional exchange, the exchange provides risk mitigation, and all of that in a familiar territory, like being U.S. domiciled. And we can offer all of that. And so I think that was the reality, is even though there was this bear market, it's produced an environment where people are really looking for what we can offer. And so we think the year of 2019 is going to be all about risk management, all about institutional infrastructure actually starting to come online in a real way, and kind of the adoption of some of the security and kind of best practices that are already in trading, but we're just bringing to the crypto space.
That's interesting. That's a conversation we've had before here on the show, that in general, the word exchange gets bandied about a lot in the crypto space and applied fairly loosely, and maybe in some applications that you wouldn't see in traditional financial markets. And a lot of the quote-unquote exchanges, a lot of people associate traditionally with crypto, the big ones that are retail-friendly, like the Krakens and the Coinbases, they're pretty much really, at the end of the day, functioning a lot like retail brokers. And that's kind of what their purpose is. Obviously, they're transacting as well, so that separates them a little bit. But a lot of their core functions, customer acquisition, bringing them in, providing the UI, all that stuff, that's retail broker stuff. And so that's kind of what they're doing. And it sounds like you're saying the sell-off was actually a good thing for you guys, because it kind of separated the wheat from the chaff, and also maybe made people realize they needed a more robust, institutional-oriented platform, and that's where you guys fit right in.
Yeah, I mean, that's exactly right. We see the retail brokers, ultimately the retail exchanges, as a necessary component to the industry, and I'm visually diagramming out this kind of sphere of the industry. You have the retail brokers kind of sitting on the edge, the retail traders and other traders kind of on the outside of the circle. As you come in, you have your dealers, your market makers, your liquidity providers, your kind of larger crypto companies, mining pools, and the exchanges themselves. And all of those people and all of those groups are building up positions, and they need to offset. And right now, it's difficult to do institutional size for a number of ways. One, you're either doing it on an exchange that's your competitor, if you are an exchange, or you're doing it on an exchange as a fund manager. But if you're doing anything large, you're going to be moving price. You're going to be getting hit pretty badly with some deep slippage. And so it's not very efficient. Or you go across multiple exchanges, then you have to have capital at all these different groups, and you have to do KYC multiple times, and that's inefficient. Or you go OTC. And when you go OTC, you can sometimes get hit pretty badly with fees or spreads. And so that can be inefficient too. So there's not really an ideal venue. And so we see ourselves sort of sitting in the middle of this kind of sphere where we can provide a kind of on-screen marketplace for the dealers, the exchanges, and the brokers themselves to offload and kind of trade in and out. And it's non-competitive because we're not looking after retail. We're not trying to compete with these other exchanges. And that's kind of a real value add. And being onshore in the U.S., regulated by U.S. regulators, provides comfort to like the next phase, the phase of crypto participation that has been looking and researching over the last year and now looking to deploy capital. And there's only so many venues that they can do that on. And we see ourselves as one of those. So that's kind of how we see the market kind of playing out. And there's few people who kind of can legitimately sit in the middle of that sphere. And I think we're one of them.
So let's talk about where you sit in that space. Obviously, you're aiming at an institutional oriented clientele. What kind of contracts, what kind of products are they coming in to trade on Seed CX? What did you launch with back on January 23rd?
Yeah, so we started with spot. So ultimately, as an exchange infrastructure, and so taking a small step back, Seed really has two kind of quite distinct business lines that are very complementary, but we operate reasonably independently. We have the exchange side, which are actually multiple exchanges. So we have a spot exchange for physically settled, commodity-based digital assets. So Bitcoin, Ethereum, Litecoin, and Bitcoin Cash have all been launched on our spot market. We launched originally just with Bitcoin, and over the last kind of few weeks and even months at this point, we have rolled out the other three. That's all USD pairs, so crypto to fiat. We will continue to build up the products that are available on our spot market. The main thing we're looking to do is bring in additional fiat support, so euro and yen, and potentially also pound. We have a couple of other digital assets that we're gonna support, including Stellar, over the next kind of month. And so that is a pretty robust or like reasonably large number of products to build up liquidity on. And so we're going to focus on building up liquidity on those core products. And then in Q2, which we've just entered today, we're focusing on new product types. And that's when we start to look at derivatives. And so we've been working closely with the CFTC to launch a physically settled forward contract on our SEF. And so that's going to be the first product. So that's pretty vanilla. It's a linear product. We want to launch kind of with the same core group, Bitcoin, Ethereum, depending on kind of the appetite. And then over time, Bitcoin Cash, Litecoin, Stellar, the other products that I described. And once we build up that linear market, as soon as Q3, we'd like to start to explore launching additional product types, including options and other types of swaps that could be more focused on the crypto community. And that's really where we start to get kind of exciting risk management. And people are really hammering on our door to get option contracts listed. And so we're kind of working to be able to facilitate that. But kind of we want to get the spot market right. There's a lot of things that could be improved upon for an institutional trader. Then we want to get linear pricing and derivatives to build up that forward curve. And then we want to do kind of slightly more structured products like options.
Well, count me among them. We've all, myself and our audience, we've been waiting for over a year now, right, for someone to really get in there. We've seen a lot of ones you can access with a VPN and all these other things, but a nice listed U.S. options crypto market still eludes us, and so that would be nice to see. Maybe you guys will be the ones who get that ball rolling over there. You've been talking a lot about building liquidity on Seed CX. Obviously, that's an interesting challenge in the early days of any new product and any new venue. You know, this kind of a bit of a chicken and egg thing when you first get out there. You know, people are unwilling to really commit capital and trade on the customer side until they see nice, tight, robust markets, and liquidity providers are somewhat unwilling to really commit and provide those tight markets until they see the customer flow. So it's a bit of a challenge in the early days of any new venue to try to kind of get that liquidity going. How's that going for you guys, and what are you guys doing to really grow that liquidity pool?
Yeah, I mean, it's such a chicken and egg problem, but I think the reality is we're not looking to have millions of customers. We look to have kind of a few hundred, maybe at our peak, a few thousand. And we really invest in each one of our participants. So it's very much relationship driven. Some of our participants, some of our market makers have invested in us in previous rounds. So there's a natural interest and kind of incentive structure for them to want to help us grow. Some of them are just interested in having a marketplace where they can offload real size. So they're putting volume and making markets on our platform to kind of with the knowledge that, okay, maybe it's slightly less liquid than they'd like right now, but they're building something. We're building something together. It's very much kind of community and relationship driven, and that's really, really key. Ultimately, when you're in this small ecosystem, you don't have the luxury of kind of burning bridges or anything of the sort. So we really invest in people. We figure out what they need. Every group has some inefficiency. So whether they're trying to make markets on multiple exchanges, and instead of cash being king, it's crypto, and they need to be able to kind of lay off risk on another exchange that needs you to be fully funded, Well, we can kind of facilitate that by letting people margin, cross margin. So you can margin a long or short position on seed using cash, and so people can kind of allocate and utilize their capital a little bit better. People really like that. And being able to trade on margin at all is kind of a value add. Being able to get access to derivatives in the United States is something that people are looking to get access to. And then ultimately, like I described before, because we're non-competitive to exchanges, we kind of have a somewhat unique flow that's starting to come our way. And I think that people like that. And so people are kind of on our platform looking for something that's a little different to the traditional retail kind of trading on other exchanges, these other kind of brokerage type firms. And so if we can kind of continue to execute on our vision of bringing OTC trading on exchange, that is unique. So people want access to that. So I think that it's really much participation. It's relationship driven, and it's offering something different. And that's kind of maybe something that I'd like to spend a little bit of time on is our settlement side of the business, which is the second side of our business, which is something that a lot of our market makers are looking for. A lot of the dealers that we work with really need. And I think that's also incentivizing people to kind of trade and bring liquidity to our market is they see the ecosystem that we're building as not just being another exchange. It's being exchange infrastructure, settlement infrastructure, and that's what they're investing in, either capital, trading, liquidity, time, and it's key. So the settlement side is something that we're really excited about.
Well, let's get into that a little bit then, because, it is, you guys are aiming, like we said, at a little bit different audience, and you need to provide some different tool sets, different infrastructure to really be able to play with those audiences out there. Let's start. You mentioned the settlement, so let's just dive right into there. Obviously, we see so many different structures out there, whether it's on the settlement side, on the margin side. The crypto space in many, many ways is the Wild West when it comes to new product development. It seems like if whatever your flavor, whatever your interest is, there's something out there constructed to meet it. Whether it's well constructed or not is probably a conversation for another day. But there are a lot of conversations whether it should be physically settled, things should be cash settled, should they be settled directly into the crypto itself. There's a lot of debate around that space. What are you guys bringing that's new and unique to the settlement table here, Brian?
Yeah, I mean, I think what's new and unique is ultimately in crypto today, there's really no post-trade settlement utility. There's no ability for a dealer to drop a trade into something like Clearport and for another group that's designated to that, or either a settlement bank or a prime broker to just take care of it. And so we built for our multiple exchanges, which are actually separate legal entities, we built a standalone settlement entity called Zero Hash. And so we named Zero Hash because in Satoshi Nakamoto's white paper on Bitcoin, he describes how when you mine or when you solve a mining function, the hash starts with a string of zeros. And so we kind of had this philosophical idea that Zero Hash is settlement. It is the settlement finality. You are proving the mining function you are solving for settlement. And so what Zero Hash does is it takes trades in from our spot exchange or our SEF, and it calculates a number of things like your position, your margin obligations, your final settlements, your fees. It can run a compression algorithm, and ultimately it then takes all of those calculations and executes ledgered movements. It actually settles on an internal ledger that it maintains, and then it takes all of that and actually persists it to the blockchain. So every single participant of Zero Hash has a segregated independent wallet. So all of your balances, your balance on Zero Hash equals to your wallet balance on the blockchain. And ultimately, we think that's kind of the key part. We're marrying efficiency and know-how that kind of needs to be somewhat centralized with the value and the kind of the point of the industry of a decentralized ledger, and bridging the two in a way that allows it to scale very efficiently. And so we've opened up Zero Hash to be accessible to third parties. And so you can drop a trade into us over like a REST endpoint, over Fix. You can message us, you can call us, and we will drop that trade into the same flow I just described. And so we have kind of traditional FX, ECNs, we have single dealer platforms, we have brokers who have captive audiences who are all in other assets, in FX, in treasuries or wherever, looking to turn on crypto. But the biggest friction that they've seen is there's no post-trade facility. And an FX ECN doesn't hold cash, doesn't settle cash. The trades are delivered to a prime or delivered to a bank or delivered somewhere else. And so that doesn't exist in crypto. We can take in a trade. We can settle both the fiat and the crypto leg, and we can do it all quickly, instantly, and in a very scalable way so that these groups can start to turn on new liquidity in crypto. And ultimately, we see that our exchange is kind of very unique and can attract unique volume, but we'd be naive to think we'd be the only exchange ever. And a rising tide lifts all boats. So if we can turn on liquidity and that's captive in other existing FX or other asset exchanges and get them trading crypto, that brings new liquidity into the space. As a company, we're obviously helping settle it. So we're kind of participating in the value proposition, and it brings new volume to the overall industry. So we're really excited about that. It's currently being implemented with a number of groups. And so Zero Hash is something that I see can really, really help the industry. It's a true utility for exchanges, brokers, dealers, anything that falls within that bucket.
You know, it is fascinating to see just how different in many ways and respects the crypto space is from traditional space. You talk when the new exchange venue in the derivatives or cash equities, I don't care what space it is in the traditional financial world, the notion of custody really isn't as big of an issue, let alone the cybersecurity, clearly an issue, but nowhere near as front of mind as it is in the crypto space. I've joked many times here on this program that crypto in many ways is the bearer bonds of the 21st century. You don't have the old movie with the guy on a train with a suitcase full of bearer bonds, handcuffed to his wrist. You don't have that anymore. Now it's just a guy with a little jump drive in his pocket full of $10 billion worth of take your token of choice and put it on there. So it's a very different environment. And we know from talking to a lot of institutional firms here that it's very much front and center for them. They're not going to commit any capital to a venue that they deem to be insecure. So how much of a issue, you kind of touched on security and when you're talking about the Zero Hash here, how much of an issue was that for you? And really, how much of an obstacle when you were out there maybe doing the early rounds for Seed CX and talking to people and kind of getting the lay of the land? How front and center was that cybersecurity conversation? And obviously it was pretty pivotal because you guys are leading with this, but how much of an obstacle did you view this as, and really as a way to get more institutions into the space by kind of smoothing that entry point a little bit?
Yeah, I think it certainly is an obstacle. And the way we've solved it is having kind of no single point of failure. And that's not to say there's no potential for failure, but there's no single point of failure. So every single participant has a segregated wallet per digital asset. And every single wallet is a multi-signature wallet with 2 of 3 requirement to sign a transaction exiting. Every wallet requires whitelisted addresses. A whitelisted address needs to be approved by at least 2 people at the participant. Every transaction, once signed by the 2 keys, is then manually reviewed. But we do this all in a way that you can get your money in that same day. And so we really, really wanted to kind of marry the worlds of regulation, security, and efficiency. And so that's kind of the overall goal of Seed is kind of best of tech, best of reg, and best of ops in traditional markets and bring it into the crypto space. So security perspective, everything I described is kind of the operational flows that we could implement to make things more secure. I think the reality is a lot of people were kind of concerned about custody, not only from security, which we think we can mitigate by not having kind of these single points of failure. We're not going to have a situation where I go on a vacation to India and seemingly pass away and then all of the crypto disappears. I couldn't possibly move to any single digital asset that is stored at Zero Hash independently if I wanted to. There are kind of strict controls in place. And so that's one step. The second is just being able to understand why people want better security. Yes, you don't want your assets to be hacked, but there's also regulatory concerns. So an institutional group generally needs some sort of segregation, some sort of segmentation. It generally is enumerated in some investor obligation, in some regulation somewhere, in some law. And so you need to be able to kind of empathize with that and build a system that fits with the environment that they're used to. And when you're talking about a trust or a bank, segregated accounts, and they come to the crypto and everybody's sharing an omnibus wallet on an exchange with a single user login, it's so different that it's impossible to reconcile. And so that's kind of how we found it. It's not just security, because you can build as many steps as possible. It's being able to marry it to what's the kind of the regulatory requirement, the things that they're familiar with, and then being able to do it quickly. And so I think what we found recently is that these pure play cold storage wallets, you kind of joke about the guy with the bearer bond briefcase, but that's actually how some people transact. Is they have a guy walking around with a briefcase handcuffed to his hand, and in the briefcase is a USB. I kid you not, that is kind of the security mechanism. And so from our perspective, how can you possibly say something is secure when there's a cold storage wallet provider and they won't tell you who has access, where the vault is, what kind of security is in place, what kind of business continuity is in place, what happens if that vault goes on fire? Like, are all of my assets gone? And you'll be hard pressed to find someone who can answer those questions. So being able to get things that same day, and then the movement away from cold storage was something that we've seen happen pretty rapidly. When we first started about, I don't know, maybe almost 2 years now, year and a half, talking about our kind of how we're building and then actually building our wallet solution, people were very much focused on cold storage. And they wanted to see something around cold storage because there was no other way to solve for the wallet. But being able to store private keys online is not new. We store private keys and private information in accessible formats all the time, in every asset, in every industry, and kind of throughout the world. It's just doing it in a way that's secure. And so we actually originally had some insurance providers say, or banks say, we won't work with someone who has hot wallets. We had a bank say to us 2 weeks ago, we won't work with anybody that has cold wallets. And it's that quick a transition. A bank will not touch an exchange that maintains only cold wallets because they don't have an understanding of how to audit it.
Wow, that was all the rage not too long ago. You're right, and now they've pivoted on a dime, or in this case, a token to keep the the analogy the same. You know, I know we have to keep rolling with the Bitcoin rundown, but I really quickly, before we get to that, because I know the other area I really want to touch on with you guys, we see it a lot in the crypto space, which is kind of this arms race over leverage and margin. You know, I kind of use the analogy of the craps tables at a casino. You know, you go to a nice casino and maybe it's 10x odds on the casino. Then you start going maybe to a more rundown casino in the worst part of town. All of a sudden, it's 1,000 times odds, and they're doing whatever they can to really lure you in. And we're seeing a similar arms race, maybe with similar means behind it in the crypto space. And I'm curious, obviously that's not going to play for an institutional client. So what are you guys doing on the margin side to really kind of make this ready for prime time for size institutional players?
Yeah, I mean, ultimately, just the kind of main headline is for Bitcoin, it's a minimum margin of 30%. For Ethereum, it's minimum of 40%. And it ticks up based on the asset and the risk associated with it. But we actually run a risk-based margin model. So every pair on our spot market, we perform a 5-day value at risk measure with 99% confidence. So it's pretty kind of vanilla in other markets. It's how the CME prices OTC options and swaps. We take that model and we compare it to the minimum, and then we take the higher of the two. In the SEF, we extend the minimum to a slightly higher level. And because it's derivative, it's slightly more structured, it's slightly more potentially risky. And so the minimum for Bitcoin, for example, is 40%. So it's an additional 10% minimum. And so that's pretty much how we've structured it. We're not doing any sort of 10-to-1 leverage. We're doing roughly 3-to-1 leverage, but it's not based upon just an arbitrary decision. We do it based on the risk associated with the product. And then we re-review those minimums kind of on a quarterly basis. So we're trying to take a slightly slower, slightly more rational view. We're still giving margin, and a lot of groups don't even really want that or are kind of new to that and are happy to trade spot fully collateralized. But once they start to see the margin value and kind of the efficiency they can get out of it, they get very excited. So that's how we structure it. That's how we think about it. Ultimately, there's a lot of good indicators and a lot of good basis in other industries. So we don't need to reinvent the wheel. We just need to bring the wheel to crypto.
I like that. We need to bring the Bitcoin breakdown to our audience. Without further ado, let's keep on rolling into the Bitcoin breakdown segment.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin breakdown.
It's just a problem with this show. There's too many interesting conversations to have in the world of crypto, and sometimes we run out of time to talk about what's actually trading. But we got time for you this week, listeners. Don't worry. Coming into the Bitcoin breakdown, of course, the portion of the show where we break down the biggest market in the crypto space, which is still all things Bitcoin. And it's been a good week for the bulls out there. People have been looking for a while for some sort of sustained bullish argument to get behind Bitcoin. Again, we saw arguments about halving and lots of things like that. And it seems like in the aggregate, those are starting to take hold. The Bitcoin up about $180 from where it was last week at Showtime. We were around 41, we were around 39.5 last show, right around 41.30 coming in to Showtime. So a good week for the bulls out there. Also, the numbers are in, obviously, for Q1. We're just kicking off Q2 here today. Happy April Fool's Day. Don't get fooled by anyone. Be wary on a day like today. Don't worry, we won't trick you, but a lot of others out there won't make the same promise out there. And this was a good quarter, as you might imagine, for Bitcoin. The first time since it closed this year with about a 10.9% gain coming in. So a good time. Best quarterly gain pretty much since 2017, actually late 2017. So not even into the early realm of 2017. First double-digit quarterly gain for Bitcoin since the final 3 months of 2017, so the final quarter, obviously, of 2017. Of course, that was a little bit of a different order of magnitude there, talking about 220% back then, but still not bad, nearly 11%. So people will take it. Double-digit gain out there for Bitcoin. If you want to have a quick quarterly breakdown performance, the last quarter of 2017 up 220%. The first quarter of 2018 down 50%. The second quarter of 2018 down about nearly 8%. Q3, a little bit of a ray of sunshine, up about 3%, off 44% in Q4 2018. And now coming into Q1 of 2019, just shy of 11%, 10.9%. You guys remember we had our friends from Skew on our last episode. They had a lot of great data available for you. If you guys want to check it out for yourselves, it's all free. SK3W.co is the place to go. And if you do that, you check out some of the information like the realized vol going on out there in Bitcoin, which has come off aggressively, shall we say. The 30-day realized in Bitcoin down aggressively. It was about 41 on our last show, down to about 24 and a quarter right now. So interesting stuff out there. Also saw some interesting spikes in a lot of the platforms where you can go to trade options. Unfortunately, still need a bit of a VPN if you're US, but overseas it's pretty easy. Platforms like Deribit still doing decent paper. They had a big spike back on the 28th of March in terms of their overall options volume. Remember, they quote it in kind of the notional going on, but they traded about 42 million worth of contract. That's their biggest spike in quite some time, since going back, at least to this data I'm seeing here, back to November of last year. So a decent spike here. So maybe the bullish move here in Bitcoin really starting to drive a little bit of interest, a little bit of action, certainly on their options side. It was. And looking at the skew data here for June, looking at the Bitcoin skew here for some of the implied options, obviously the puts still have a pretty strong bid coming in down shy of right around, like I said, we're coming in a little bit north of the 4,000 level here right now. When you get down into like 3,500 or so, we see a nice market bid for those puts. And this starts, it's still a bid for the calls too, but it's much, the slope is much slighter, shall we say, than it is for the puts, which ramps up very steeply once you get down into the mid to low 3,000s. The calls, it's a much more, shall we say, quiet, languid move to the upside, and you don't get, the puts are about an 80 vol, implied vol around the 3,000 level. You don't get that same implied vol level till you get up to about 10,000 in the calls. Give you a little bit of a frame of reference there for how it's looking. In terms of the futures, another active week, again, about 41 quarter coming into Showtime on that front month April future over there at CME. It's up 50 handles. So a good day. Volume-wise, pretty decent as well. About 2,000 contracts, not a ton, but not nothing either. Again, that's a 5X coin, so that's about 10,000 contracts over there. Brian, there's a lot to kind of going on in the world of Bitcoin and crypto right now. Obviously, you guys are still kind of ramping up. You're in the early days there of the Seed CX platform, but I'm curious, what have these last few weeks been like for you guys as we're seeing the worm maybe turning a little bit, at least in the short term? We're seeing bull starting to pile in. Obviously, we saw spikes on options volume on certain platforms. The futures doing fairly well. How are things trading and trending so far in the early days over there at Seed?
Yeah, I mean, I can very easily, we had a kind of second or third record day last week And so we're still very early days, right? So it's kind of easy enough to have a new record day, but we're seeing everything growing. The rate in which we onboard new participants, the rate in which they're participating in the market, and the rate and kind of the size and volume and transactions that are being pushed through our market is all going up. We actually had our largest single trade in Bitcoin on Friday just before the close. So and that was kind of as all of the kind of slight uptick was going on. So we're seeing kind of good momentum and good growth kind of throughout the board.
Do you think, I mean, it's kind of interesting to see now that we're seeing these spikes on Deribit and other platforms as we're seeing a little bit of bullish, fear come back into the marketplace. Do you think, at least in the near term, you think crypto needed a little bit of this kind of bullish shot in the arm to get some people excited and interested in it again? I mean, obviously you mentioned earlier in the show that the protracted sell-off was actually a boon for you guys because it gave you a chance to sell your risk management and institutional expertise. But maybe in the long term, I mean, if you had another protracted year of 2019 like we did in 2018 where it was just endless sell-off down 40 or 30% a quarter, that might have really taken the luster off of it a little bit. Do you think, at least in the near term, the crypto space kind of needed a little bit of a bullish story to kind of get behind and rally behind to kind of maybe get a new flood of investors and maybe for you guys get some new users on the platform? Has this been kind of a bit of a shot in the arm for you guys, you think, as well?
Yeah, I mean, don't get me wrong. Like it was helpful to our pitch when kind of prices weren't exactly going up at the same rate that they were, but it's always good to see kind of a positive momentum in the industry, and it will help our business, and it's helping our business right now. So I think there's kind of two sides to it as well. The positive shot in the arm, one, brings more volume to our platform and more traders, more people participating. But there's kind of the kind of back of your mind thought where a lot of institutional groups are making a research-based decision about whether or not to enter the space based on data over the last year or two. And a lot of that data is heavy with kind of retail flow and kind of ICO flow. And so it's slightly structurally different than kind of the market today. And so we don't see this, but my thought could always be that there's a potential that some institutional groups are coming in or want to come into the space to see a certain type of kind of Sharpe ratio or return profile that maybe doesn't exist anymore. And so we still need to maintain kind of, from a portfolio perspective, it makes sense to allocate into crypto because it's uncorrelated and that there's growth, but the story is so much easier to pitch when there's sort of this kind of broader market bullishness. And so it definitely serves us all well.
Yeah, I certainly can't argue with a little bit of a shot in the arm, just to keep the story alive, keep the products churning, and certainly they are churning. Looking at the data on the different platforms, I want to get your thoughts on this story too. But I want to hit the altcoin universe. I think we have some listener questions we want to get to too. So without further ado, we want to squeeze you guys in too. So we'll keep on rolling right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody. It's not all Bitcoin all the time. Nope. There are other products out there, and they've been moving quite a bit and shaking quite a bit as well. Of course, welcome to the altcoin universe, where we break all the rest of it down, except for right now when we talk about the market cap. Number one, still Bitcoin. $72.75 billion. So it's still flirting around that 50%, a little bit north of that, obviously, now with the rally, but still hovering right around that 50% overall total in terms of net percentage market cap. Number two, ETH, about 14, closing in on 15 billion now. Number three, good old XRP with about 12.5 billion. Number four, EOS with about $4.33 billion. Number five, good old Litecoin with about $3.23 billion. Then it really falls off once you get outside of the top five, get down to 10. The good old Bitcoin SV, you got about a little north of $1 billion out there. But still, it has been an interesting week. The rally out there is not confined to Bitcoin. No, not at all. We're seeing XRP getting back up to that 31 cent level. Not huge, but still a little bit on the upside there. It's been vacillating back and forth between 30 and 31, getting back up there again. ETH up strong, up about 7 handles from our last show. So at about 140.5 coming into showtime. So off today, but net on the week. It's been a strong week for ETH. And Litecoin, pretty much, as we said, pretty much for the better part of all of Q1, the entirety of the show, Litecoin's kind of been leading the dance, certainly on a percentage basis, and now set a new record for Q1. The numbers are obviously in. Coming into showtime, it was right around $60, which puts it at pretty much exactly doubling from where it started the year. It opened right around 30, and coming into end of Q1, it's right around 60, so pretty much doubled in the first 3 months of the year. That's its best Q1 performance in its history. So those of you out there who have been struggling, looking for some sort of bullish stories or things to sink your teeth into, you can't do much better than Litecoin lately. It's really been tearing it up of late. If you want to look back at some data for Litecoin over the past year, Q1 of last year was down 48.5%, then 30% for Q2, 24.5% for Q3, and down 49% in Q4. So last year, not exactly a boon year for it, but that was pretty bad. Net on the year, it lost 86%. So people out there in Litecoin land probably liking a little bit of this turn to the upside. Of course, we talked futures before. The big story in the futures also was that Kraken listed futures recently after part of their acquisition of crypto facilities. And now those are going live. Everyone was focusing on the Bitcoin side, but Bitcoin Cash and Litecoin futures are also listed, and they're actually doing fairly well, topping about 150 million in the early days out there. Let's see, Litecoin last month did about 100 million in notional. Again, they quote everything in notional. I know it's a little confusing, but that's kind of the lay of the land in the crypto space. 100 million in notional. On Kraken, Bitcoin Cash just under 50, so puts it around 150 for the two of them. So all the headlines were around Bitcoin futures, but the other products out there also doing fairly well. Brian, we talked earlier, you guys also are playing a bit in some of the altcoin and looking to expand. How are those products faring for you, and where do you see the most interest from your clientele right now? Where do you think the next big push expansion for you guys in the altcoin world is going to be?
The first 4 products we launched were pretty vanilla. I think so. Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. People definitely want Bitcoin SV. There's some kind of spread trading that people are looking to execute on, and you haven't really spoken about it, but I guess from a pricing perspective, isn't maybe as exciting. But some of the stable coins, Paxos, USDC, and TUSD, the trading of those is sort of interesting to us, providing an order book, but I think getting them supported for settlement and custody is really key, and a lot of people have been asking for that. So that's kind of the next big push for us, is getting those coins. They're all live now, at least supportable, but actually building out that infrastructure. Then the new coins will actually be Bitcoin SV and Stellar, where a lot of people are asking for us to build up a book, especially as we start to roll out new fiat. Building up all of these books in non-USD is something that I think a lot of people are interested in, to kind of capture some sort of triangular arbitrage. So that's really where we see our traders' attention, is the same products but just quoted, and then providing the fiat pair to complete the trade. So that's kind of how we're thinking about it. Not necessarily expanding too far down the list of all coins, but once we kind of have our suite, kind of 6 to 8, building out the pairs.
Well, speaking of what people are asking about, they're asking to get their questions on the show. So without further ado, we got a few minutes left. Let's see if we can squeeze in a few of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, welcome to the Crypto Questions. The name says it all. We answer your questions. We got a bunch of them here, more coming in all the time. I'm going to jump to the bottom here because this is an interesting one. A lot of people asking a similar question like this. This came in from Neal S, maybe, or Neals, maybe plural. Maybe there's multiple Neals asking this question. We shall see. But he wants to know, I wanted to kind of get your two cents on this, Brian, because this has kind of been top of mind for a lot of people in the space over the last week. We touched on the show last week, but it's very controversial stuff. Neil's asking, do you guys buy that Bitwise data about most crypto volume being fake. He's, of course, referring to that application that Bitwise put in for their ETF with the SEC recently, where they pretty much, via their own analysis, determined about 95% of what is widely thrown around out there as Bitcoin volume is actually, as they term it, fake. Very interesting stuff. Brian, obviously this hits near and dear to you guys as a crypto venue. Neal wants to know, and I'm curious as well, what are your thoughts on that data and that number they're throwing around out there, 95%?
Yeah, I mean, 95% is kind of it's kind of extreme. Hopefully, it's not as high as that. But I think anybody who's been in the space for a while has seen there's been kind of some shady activity, people trying to pump different ICOs. So pumping volume on an exchange, I can certainly believe that. There's no kind of surprise there. I think the biggest rationale behind it is the CoinMarketCap. The actual CoinMarketCap website is probably the most heavily fared. And when you start to rank exchanges and products, there's such an incentive to push yours higher. And so pushing wash trades through the system, if you're not regulated, it's kind of an interesting gray area. Obviously, we are regulated. We surveil our market, kind of looking towards the regulated side of our business, like derivatives. It's illegal. So there's kind of those realities. In some markets, there's not those rules, and so people certainly have been playing games. I hope it's not as high as 95%, because obviously that's very extreme. But I could easily see it being quite significant. I think that's really the value of what we can provide. The markets that they said were kind of real, the real volume, it was kind of what you'd expect. But when you go to CoinMarketCap on any day, look at top 10, look top 20, there's always a few names that don't seem to fit, and I think this is just validating that idea.
Of course, it's good for you guys too, just to not to have that large amount of volume being fake, but just in general, if take a decent amount of that volume off the top, all of a sudden it makes new venues and the amount of volume you can bring to the table a lot more significant than maybe it might have been if you had that full fire hose of crypto volume coming at you. So great question, Neal, and everyone else who asked that similar question. It's a lot of people are talking about that the week. I want to jump to this one too, Brian, because this is kind of right up your alley as well. This comes from Nickel Tim. He wants to know, does the death of Cboe Crypto open the doors for other exchanges to fill their shoes? Is this more of an opportunity than it is the death knell of crypto futures? And this has been another story, particularly on the institutional side of crypto. Been a lot of hand wringing over this. Of course, back in December of 2017, Cboe and CME were racing each other to get the first listed Bitcoin future out the gate. Fast forward a year and change, and Cboe deciding they're washing the hands of it, not going to list anything new past, I believe, June is when their final contracts will wrap up. So effectively getting out of the Bitcoin futures. They haven't, I disagree with him, they haven't, it's not the death knell for crypto then, they haven't washed their hands of it completely. They may let the door open, maybe they want to get back in, but for the time being at least, no new listings. But we've seen a lot of people wringing their hands saying, oh my God, there's obviously no institutional interest in crypto, because look at Cboe, they shut it down, and if there was any sort of institutional interest, they would have kept going. So it's interesting to see that take. I'm curious, maybe we'll start there, Brian. What are your thoughts on Cboe delisting their crypto futures, maybe some of the thoughts behind why they may have done that? And then B, from your guys' perspective as a new venue entering the space, is this an opportunity for you guys?
Yeah, I mean, second question, certainly, definitely an opportunity. I think people still need to be able to manage risk, still looking for a place to hedge out. So offering any sort of infrastructure to support that is key. And if there's if we can provide that, we can kind of look for that liquidity and bring it to our platform. Is certainly an opportunity. I think why they might have chosen to do this. I mean, maintaining a product is not trivial. And it's especially in a market where, such as the CBOE, where it's centrally cleared through the OCC. So there's kind of a lot of moving parts, a lot of stakeholders. I could imagine that the pace or the rate at which they're trying to roll out products, or the price at which they need to pay market makers to trade those products, not being worth it. But that's somewhat also a basis on the product construction. So theirs is an index that settles to a single exchange, an auction on that exchange. And that auction is not always very liquid, in case it's often very illiquid. And so being able to hedge that product or really trade that product, maybe it can be kind of risky, so you might have to pay a high premium to your market makers. So maybe that was a huge factor. I know that this is often an issue with kind of new listed futures contracts. The price for market makers can be really quite extreme. And so it's that could be one factor. Another factor is the fact it's not physically settled. So we really see that there's a value in physically settled contracts. I'm surprised that would lead to a complete delisting, but I think when you tie it to product construction or any issues they have with market makers, all of these things kind of come together, and ultimately, if they don't see the value, that's more opportunity for us to bring it in. And I think you kind of pointed out the CME had a growth in volume. We're seeing kind of a little bit of a bull run, so we're not seeing people step away. We're seeing every single participant we talk to, every single institution we're talking to is buying, investing, researching, or trading. And kind of the simplest way I can provide an example of that, I was at a institutional FX conference a few weeks ago, and there was a question asked of the audience. 30% of the buy-side participants in the audience were trading crypto today. 70% will be trading in the next 12 months. Those are the statistics. And the things that were holding people back, custody was mentioned. It was more infrastructure. How do I trade something that I'm familiar with? And how do I trade something in a way that truly is giving me exposure to the product? And I could see that being kind of difficult for a financially settled product that doesn't quite reconcile. So I think we have an opportunity to provide something different. I don't see it as a death knell. I see it as an opportunity. And all of the indicators are still kind of showing positive lights for us.
Unfortunately, that music means we'll have to leave it there, listeners. But good stuff. Yeah, I'm with you there, Brian. The hand-wringing kind of struck me as odd because we do still have a very popular listed venue right now with the CME, Kraken getting into the space. So there are more players in the Bitcoin future space than just CME. But it did seem like there was a lot of needless hand-wringing on that side of the fence. But unfortunately, like we said, we'll get to more of your questions on next show, I promise. We get a ton of them. Keep them coming. You guys know where to find us. We do love to hear from you guys. But before we go, Brian, we talked about a lot of interesting things, touched on a lot of interesting new offerings you guys have on your platform. If our clients, or if our customers, I should say, our listeners, your clients, your customers, our listeners, if they're interested in learning more, maybe becoming clients or customers of Seed, where should they go? What should they do, sir?
Simply go to seedcx.com or reach out, contact@seedcx.com, and we'll be happy to kind of answer field any questions. There's a bunch of good information on the website. We're super excited to bring on new participants, and the settlement side of the business is going to be a huge segment of 2019. So looking forward to all that. But feel free to reach out.
There you go. Check them out, SeedCX, also SeedCX on Twitter to stay informed of all the latest developments. And on behalf of Brian and indeed myself, I want to thank all of you out there for joining us live after the fact, for sending in questions, for all the fun stuff that you do, for voting in all of our various polls we have going on. The Broker Madness, final day for round 2. Get in there if you haven't done so yet. And we'll see you next time for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.